Hey, it's Dave Knight here. Let me be completely honest with you. I had no one take me up on the 4-week intensive course on my existing mailing list. So either one, I guess one of two things. One, you're making all the money in the world that you ever need and you don't need any more. Or two, my price was too high. So I'm going to go with my price was too high until proven otherwise. Um, Let me just cut to the chase right now because I think what you need to know is what the price will be, right? So let me go ahead and get to the page itself. Now, the way it's going to work, notice it's $97 per month for 12 months. Now, it's a subscription for a year, but if you pay me $97, that is non-refundable. So let's just get that out of the way right now. There are no refunds, but if you don't like the course, obviously you don't have to pay any past that point. You know how to cancel a subscription, and if you don't, I've got a refund button on my side that will be able to refund you if you don't like the course. But with that being said, if you spend the initial $97 with me, that's non-refundable because you're going to go over a lot of proprietary information that I have, and over the next 4 weeks or the year, or this is just going to be a continuing class that I'm going to have over and over and over again. Now, you know, let me be completely honest with you as well as this. I don't trade the month of December. So we'll have limited sessions in the month of December, and I also don't trade in the month of July. That's just pretty much, well, let me rephrase that. I don't trade past July 4th in the month of July until the end of July. And as far as December goes, I usually trade the first 2 weeks of December, and then I take off a month that goes into the first week of January. Then the second week of January is where I kick in and start trading again. So if you look at my trading year, and hopefully you guys can mimic my trading year the way I look at it as well, is that I look at the second week of January, whatever that Monday falls, all the way to roughly right before July 4th or the week prior to July 4th, how that falls. And then I take the month of July off, and then I start slowly back in August, and I go August all the way up through the second week of December. So I physically take 2 months off of trading a year. So if you look at it, that plus the days that I don't trade, I like to trade Tuesday, Wednesday, Thursday, sometimes Friday, and every so often I like to trade a Monday, only if there's extreme circumstances, like kind of like what we ran into over this last week with the Chinese and the unraveling of the Chinese and devaluation and all that stuff that went on. We had the Black Friday that converted into Black Monday where the market just tanked, and the crude oil market was a very profitable trading day that way. Anyway, long story short, on the email that's been sent to you is this, and this is as low as I'm going. And the way I look at it is you're getting my services pretty much for only 10% of the what I said in the very beginning. So eventually the first I said 997. Now I slashed this thing so far because I believe that I've got something very powerful that all you need to do is look over my shoulder for a few weeks and you probably understand it. And maybe that's all you need to do is $97 and you'll just move on. But I would like to think that the value that I put in to your trading, that you'll continue to pay that 12-month subscription and reimburse me the $997 is how I look at it, plus a little bit of interest for my time as well. So that's kind of how I view it, and hopefully that makes a little bit better sense for you. I want to go over my trading sheet that has been submitted here at Top Step Traders. This is the continuous combine that I opened up on July 13th. Let me get my screen draw tool out here. You can see this is the date I opened it up, July 13th, but you can also notice I didn't start trading this until August 4th. And you notice that if you look at this right here, that's 10 trading days. So 10 trading days, and you can see that I'm all green all through here. And I got the account balance where I wanted it to do. And by the way, on a $30,000 account, you need to have a $1,500 positive balance. So this is what was submitted to Top Step Trader. You can notice here's something here's my average win duration. The average win was in 44 minutes, and the average loss was in 8 minutes and 10 seconds. So that goes back to let your winners run, right? So let the winners run and cut your losses short, right? So if that doesn't speak volumes, I don't know what else does. The total win percentage, and that would be the wins versus the losses, how you look at it that way, that's 47%. But my profitable win percentage is 50%. Now that is just wins divided by losses by day. So there's another category by day, and that's how you see that. So let me get that screen draw tool going. So that's where you see the 50%. So if you look at that, that means that I had 5 winning trading days out of 10 here at Top Step Trader. Now, if you look, my highest winning day was this day, where if you remember, and if you don't remember, go back to the 19th of August. I could have taken a lot more money out of the market. I could have doubled up on this trade, but I knew at that profit level that I was at right there, all I needed to do was do what I did right here. And you notice I took a minus $33 loss on 3 trading days because I was up at this point in time after that trade. I had 75% daily winning rate. So I allowed myself to bring that number down just to pass the combine and move on to the next trade. So if you remember what I said I did is I took a 4-tick stop loss against a 2P profit target, which pretty much worked out to be 40 ticks. If I would have got one, I would have ended up putting another $400 in my account and made this instead of 31,531, I'd have been closer to 32,000, right? All right. So if you remember what I talked about on the previous video, I want to go through the last 3 trading days, meaning today being the 26th of August, yesterday the 25th, and I actually talked about the 24th already, where this would have been the trade here and then short it down to take this based upon that right there. So I really don't want to talk any further on the 24th. Just know that that trading day, that the 12p was 37.88, and you could have profited all the way down to that area and made a good amount of money on the trade. Just one trade. In my humble opinion, if you look at the trade thing, where $600 and something, if you just catch one of those, 2 of those. And the point is that the way I look at trading and the way you should be looking at trading is that you want to take a lot more away from your trades on the wins than you do on your losses, right? So you want to be able, and the point of that is you see that in the trading sheet that I put together. So if you go back and look at the wins versus the losses, look at how I cut the losses short and let my profits run, and taking profits along on the ride, all trading just one contract. So let me get rid of the screen draw. Let me pause this video at this point, and I'm going to fast forward to actually yesterday would have been the 25th of August. Now, as I look at the 25th of August, move this over a little bit further. This is the open of the crude oil market at 8 a.m. Central Standard Time. And the only trade that I'd be looking at on this Tuesday would be just pretty much looking for the CL power open range trade or port, and then possibly a second trade if I lose the first one. So what I do right now is, the market opens up. But prior to the market opening up, what I'm looking up here in the back, going back to around midnight at this time, is I'm looking for any area that decided to move above. See, here's a, let me get my screen draw. There you see this one here above the 400 volume. You see this one above 400. Those are both blue bar volume. This one was at 430. This one was right at the next day. There's some more right here, 3 more. A possible red. So right now I've got 5 blue, 1 red. And then I got another high one right here, blue bar volume. So what I'm getting at right now is that I am looking to short this market. Right now I've got like 6 or 7 blue bar volumes and only 1 that touched on the red side, the buy side. So basically what I'm getting at is I am a seller of the market right now, and I want to be able to sell this market. So if I mark off what I'm looking for, so let me go ahead and put the vertical line on the other side. 805 mark. So let me go ahead and mark the chart here at 805. This sets up the 1, 2, 3. Although here is our 1 point, 2, and we just busted through here, and this ends up being the 1 point again. So here's our count: 1, 2, 3. Comes down, never breaks through here. So this right here ends up being your selling point. So let's go ahead and put the vertical line in the chart here. Now, we can physically not take a trade here, and I'm going to tell you why. Remember the 830 mark, right? So let's go and mark out 830 and see if we had a trade before 830 Central Standard Time. Here is, and let me mark the chart here. Here is our 1 point. We're just short in the market. That's all I want to do is short, based upon basically looking at all the blue bar volumes that we saw before. Okay. Here's our 2 point right here. This does not break through, so we're still looking for a 3. Here's our 3. But notice our 3 point. I know that's hard to draw and write numbers. Here's 1, 2, 3, but look at the 3 point comes in after the 830 mark. So what happens in this case is there's no trade on the CL port, or the open range trade. This moves into phase number 2. So phase number 2, I need to have a tiebreaker. Basically what I need to see is volume above the 700 level to even consider anything at this point. So then it has to happen after the 830 mark, right? So here's our 830 mark, and we're looking at let volume lead the way. So basically what I'm looking for is a volume, to let volume lead the way, and I want my volume bar to be over 700. Let me get rid of the screen draw, and let me move it over to show you a possible signal. So here's a bar right here that comes in at 691. Now, is 691 700? No. So yeah, I know it's really super duper close, but it's not 700. So we pass on this bar and we continue to look. But you notice that here's our 700 bar, and we're looking for something that lets us know that we want to get into the trade. You know, here was the short. You know, you could say, well, I could take the short. Yeah, this is discretionary trade because you're a discretionary trader, right? Yeah, certainly you could have taken this short, and it looks like you could have profited something in here if you would have taken that, because this would have been our selling point right here, and we would have been looking at that to come down. So yeah, you know, 830 is to keep you away from markets that aren't going to trend. Well, maybe since the Chinese, all that stuff that was going on, maybe Tuesday would have been a good day to go ahead and ignore the 830 mark and go ahead and take your rule and go and see where it would take you. But according to rules, it's a no trade. So what I'm looking for is a 700 volume bar. And this, by the way, is not 700. Now, let volume lead the way as a bracketed trade. So let me get the screen draw tool back up here. So let volume lead the way. This would have been a bracketed trade. And what I've been looking at to do is buy above here and sell below there based upon if that bar would have been above 700, which is not. So we bypass it. We say, no, no, thank you. No, thank you, sir. No, thank you, ma'am. And we move on. So let's look through here. And this is just the morning session. Morning session, I cut it off around no later than say 10:30, 11:30, depending upon your time zone that you're in. So here we are at 9:47 Central Standard Time, still nothing. Here we go, right in here at 10:11. This bar right here is 664, and this bar is 616, still nothing above the 700 mark. Now, I want you to look at this. What happened? Yeah, we saw this sell off right here, right? But then we saw the market do what? It bottomed out here, right? And then it went, where did it go? What happened to it? It went straight up, right? It went boom, boom, boom. We've been sitting on the sidelines. There is no trade. There still hasn't been a trade. And, you know, the volume has not come into the trade here. And we've sat on the sidelines here. And by the way, this is kind of the way I would view us looking and going through the trading day together in the afternoon on the day that I decide that we're trading on Tuesday. You know, maybe 3 days a week at least. As far as 3 live trading days, probably not as far as live. I mean, reviewing the trading session itself. I don't do a live trading room anymore. But with you having access to everything with my charts, with T4, with CTS and all that stuff that goes with it, there should be no excuses for you being able to see. And you're supposed to be in a simulator for at least 30 days to start with, up to 90 days before you go and put in real money, right? So that is how you should be looking at this. So it's a learning curve that you need to go through. So we have no trade that's come in here. And let's go ahead and fast forward on. That's the one we looked at before. And we actually physically have no trade here on the Tuesday. Notice at 11:30, which would be my cutoff, which is 12:30. That's as far as I'm going to look at a trade on to take a trade in any session. So this is going to be my stopping point, no later than this. I probably would have quitted. I probably would have quit a lot sooner than this area, but right here is telling me that, you know, this is a market that's not going to trend. It's not favorable for a trade, and I'm going to lose more than I'm going to win on the trading day. So therefore, I was looking at volume. Let volume lead the way. Volume is my key, and volume was not there in the trade. Therefore, there was a no trade day on Tuesday, August 25th, 2015. Now, if you lost a lot of money on that day, now you know why. Hopefully that makes kind of sense to you. That's the way I view my market and my trading. I have to have a reason to get into a trade. If it's not there, taking a no trade is still a position, right? There's 3 positions that you can have in a trade. You can have position number 1 is you're in the market, right? So you're in. Position number 2 is you're monitoring the trade, and then position number 3, I guess, out, and then you're standing aside. So standing aside is also a position. So that's how I look at it. That's how you should view it as well. So let's fast forward to today being August 26th. All right, so here we are at August 26th, and this actually, let me get rid of these. So this is actually the, believe it or not, this is the points from Monday's trading that I had, that I was using. And today is actually August 25th. I had it on there to start with. So let me mark off. There's your 8 o'clock, and then the 8:05 area. And let me talk about what I believe that you should be doing on this day. Now, let me pause and bring over Forex Factory. All right, and let's get the screen draw tool out here. In my humble opinion, you shouldn't be trading the crude oil market until after this report is released. Wow, that sucked. Let me try that again. Here's your crude oil inventory. Now, you can take a trade, but if you do take a trade, at the 805, after the 805 to 830 mark, you want to only take it for 1p, no more than 2p on any given day. So, and what you want to do with this is, if you do take a trade, you take the winnings to help offset any losses that you'd have on the CL pit portion of your trade, right? The way I look at it, though, is I pretty much ignore the morning session and I wait for the inventory report to come out. This is something that I've decided to do in my trading recently. And therefore, most likely, if I do take a trade, if I decide that I'm going to trade after the 805 open, I'm going to stop looking for a trade at the 8:30 Central Standard Time, or I'm going to look to get in the market at 9:30, a little after 9:30 a.m. Central Standard Time, right after the release of the inventory report, after it makes its decision which way it wants to go. All right. So this is the 805 mark. And notice that if we look at our 1, 2, 3, here it comes all the way down here to set up the low, and it comes through here, goes down, then comes back up. This is a normal thing that happens on the inventory day. You know, you don't see a lot of follow through until after the inventory report is released, okay? So let me fast forward to the bar that's getting ready to be the inventory report. All right, so here is our inventory release right here. And it's a blue bar volume, and it's above, well above, which most of them are, over the 1,000 mark here. So you notice that we have several that crest over the 1,000 mark right there. So there's like 3 bars that I can see off the top of my head that crested over the 1,000 mark within, looks like a little over 1.5 minutes, almost 2 minutes of trading. The way I view this trading day is that I'm looking to short this market based upon that right there. Now I got something in the way. I got this pivot point in the way, but it becomes a non-factor because the 931 prints right around this area. What I want to do is be able to bracket this, and I want to short right underneath this pivot point. This would have been my trading opportunity right there. And I'd be looking to get short in this area. So let's look at this. Let's put it into the screen. I've already did this on the day, but I've changed this back to the open because I want to show you something. Now the open of the trading session itself on today, being August 26th, is 39.69. 39.69. So the 7p mark that we're looking at is to get out of the market somewhere between 38.07 to 37.38 if the market decides that it wants to continue down to no lower than 36.92 right here, based upon our open, right? Let's get rid of all this. This is something that I know coming into the trading session well before in advance, because I've got this printed off. You know, this is what I'm sitting with right now, and I've got this printed off. I've got my spreadsheet in front of me. I know exactly what I'm looking at to do here. So I don't have time to input the figures because this is a fast-moving market. And let me show you what I mean by fast-moving market. We've talked about this before, but let's do a little bit of review here. In fact, let's use this. I want to show you 1 minute worth of tick data. Here is the report release right here. And here is the 1 minute mark right there. So our 1 minute mark, and physically, as I looked at trading today, I wanted to see what I can do here. I don't know if that makes a difference. I don't like that. Maybe highlight circle here. Let's get rid of that. Let's go back to screen draw. This is where I'm selling right here, right below the pivot point, and I'm taking this trade down. So if I look over here and I measure out the bar, knowing where my pivot is, what I want to do is be two ticks underneath the pivot. pivot today is 39.23. Now I can check that on my spreadsheet too. 39.23. I've inputted all the data that I need, and this spreadsheet updates everything that I need. So 39.23. I know I want to be short at 39.21. So how I look at it is I just would have known this ahead of time, knowing that this would have been the level that I'd be looking for value. Now, what this is telling me is that if I take a full R stop loss on a trade, it's going to be 39.42. Did we run 39.42 after the pivot point? 39.42 is, let's get the line out here. 39.42 is right here. Well, that's actually 43, but you can see what I mean. Here's our entry point. Let's get the arrow going here. There's our entry point right there. This above here, we're short in the market, right? So we're selling it. This is our stop loss.
Good afternoon,
You see
traders.
any
Raj
red
here,
or
and I am
blue or
back.
green
And
or...
we've started.
Let me mute him out. Just give me a second. That's Viraj on Top Step Trader. Do you see any price action that moved above this level? The answer obviously is no, right? What was the level that we were looking at to be the low, right? The 7P mark on this is 38.07. So somewhere between 38.07 and 37.38 would have been the ultimate target that I'd be looking for. We make a move down to 38.55. So let's see what happens, and let's move forward in a trade. So the market moves down to here, which this line right here is S1, and then it proceeds to bottom right through here and then move back in this direction. So what I'm getting at is there's not been a lot of follow through. And as I look at today's trading session, you should have covered it a little under break even, or no less than, since it ran to 2P, almost 3P, you should be covering at 1P to a little above the mark here. So let's figure out where you're covering right here. On a 1P trade, we'd be looking at covering at 38.98. Hopefully you guys can see that. We moved down below the 2P mark, but we did not get down below the 3P, which would have been 38.52 right here. And then the market moved and went back up, right? So we could have been a little below this at break even to 38.98. That would have been your area as far as how many ticks of profit that you wanted to take out on the inventory trade. So basically what I'm getting at, it was a winning trade. You either got 23 ticks to say 2 or 3 ticks on the trade, all the way to maybe even you say I'm just going to go out break even and take $6. So all of those were winning trades on the inventory trade today. So if I would move this over, notice that the market went all the way back to pivot. So here's your pivot, that blue line right there, and you would have exited before it would have got there with the movement that happened prior to this. So you should have had a winning trading session on the inventory trade today. Now it could have been $6, or it could have been $230 less commission costs. But somewhere in there is where your profit level would have been on today's trading. And that would have been your inventory trade. Now, as I review, on Monday we had a nice win that you could have maximized all the way down to $37.88 on 12P based upon the extreme movement of the market, right? Extreme movement. And that's something that we'll use that to talk about in our trading class as well. We had Tuesday's trading where we had no trades based on volume. And then Wednesday, we take the inventory trade on, and it ends up being just a small win to no greater than $230 less commission costs. I hope this helps you and kind of what my intention is. Now, once again, the course itself is $97 per month over 12 months to get to the amount that I was looking at. And my faith in the human being that's in front of me, that's listening to this, that I believe I have value, and I want to help you make a decision. And if this helps make that decision to bring you into the trading class that I'm putting together, then so be it. I will. The class does start on September 1st, 2015, so it's going to start next Tuesday, September 1st, 2015. With the lower cost of the class, maybe it makes more sense. Now, what I want to do is record the sessions that I do and put them up into a members area or onto Wistia so that you can review it. If you can't be there on that particular trading day, you can still go back and review the trading session that I went through. And normal trading days for me, by the way, Tuesday, Wednesday, Thursday of any given week. God bless. Take care. Good trading, everyone. I look forward to seeing you on the inside of the CL Power VIP special trading class that I'm putting together. So it's not going to be a 4-week intensive. It's kind of like ongoing. I told you my trading days that I look at as far as my trading. So any day that I'm trading, I'm going to put together like a little bit of a class. We're going to have a join me or whatever we're going to use, and I'll let you know. And then I'll send out the link, and boom, we'll be in a live environment that you can ask questions of me. But it'll be after the trading session itself. So we'll review the trading day that we go through. All right, that'll do it for now. God bless. Take care. We'll see you on the inside. Bye for now.